Thanks very much, Pantelis, and we move on the presentation from Alan on the management consulting in the UK. If we can manage, okay.
Thank you very much, Ricardo, and thank you very much for the invitation to speak here this afternoon. Much appreciated. My friend Giuseppe was talking to me over lunch and described the UK management consulting industry to me as the cradle of consulting. And I thought that must be a kind remark, because cradles are warm, comfortable, cosy places to be. But they're also the scene of much crying and screaming and the occasional eruption of mess as well. So an interesting analogy. I'll talk to you a bit from the UK point of view about how the industry is faring, how it's performing, and also give you some few ideas about what I think the trends are and what the key issues are facing the industry as well. We also I thought a very impressive presentation this morning from Italy about how you go about collecting the data and the rigor with which it's done. We collect data from our member companies and some other firms in the industry. We think it represents around about 65% of the total of the industry, although you can never be absolutely sure about that. And it is a sample, and it's probably a sample which is performing a bit better than the average, because almost by definition it tends to be successful firms who join associations, and the less successful might even disappear. So we present it with that health warning. But I've got a graph of growth rates, which you can see on this one here, which you'll... I always like showing this because it reminds ourselves of what life might have been like in 1998 and 2000 and 2005, when growth rates were really quite extraordinary. A time at which, incidentally, nobody in the industry thought of putting up the subscriptions to their trade association when they had plenty of money. But there you go. That's life. But you'll see that a familiar story there, that in 2009, the industry, for the first time in its experience, actually shrank. Fee income dropped by 7%. And since then, there's been a steady but slow climb back out of that experience. And we reckon that in 2012, there was a growth rate of around about 7%. Not spectacular, but it's performing better than the economy as a whole. And it's interesting to ask yourself why that's the case, and there are probably quite a few factors behind it. But though the overwhelming lesson you draw is that, give or take injections of investment from the public sector, spending on consultancy is quite closely correlated with overall economic activity and growth rates in the economy as a whole. Now, the shape of that growth and the shape of the UK industry is best shown by this graph. Where do management consultants work? And that's about sectors. And sorry if it's a bit small and difficult to read. The blue lines show the rate of growth in each sector between 2011 and 2012. The red lines show what that sector represents as a percentage of the total consulting market in the UK. And you'll see immediately that the dominant sector, perhaps this won't be a surprise, is financial services. Just about a third of all consulting in the UK is for financial services firms, and half of that is with banks. To the extent somebody told me the other day that last year Lloyds Bank, one single bank, spent more on consulting services alone than the entire central government of the UK. So that's, Lloyds Bank is partly owned by the taxpayer, so you might think of it as a public sector institution, but it's that gives you an idea of the importance of financial services to the UK consulting. If anything, it exaggerates its role in the UK economy as a whole, but it is a very consulting-hungry sector, and it continues to grow its demand for consulting services. The other major buyer of consulting, as you'll see, the second in the order is the public sector, now coming in at just over 20% of all consulting spend, though that, I have to say, is massively down on 2 years ago. In 2009, 10, it would have been about 30% of the total. It's now down. It's had 2 years of very, very big drops, and has just slightly recovered in the last year. Some interesting, the government has discovered that it can cut its own discretionary spending on consultancy and done it quite effectively. So you see, those are the two big areas of consulting spend in the UK. One area which I'll just draw out for you because I think it is important for the future is that we've seen a big uplift in spending on consultancy in the retail sector. And I think that's primarily because there's just a massive, huge revolution going on within retailing. Whole new business models emerging, old business models collapsing, the drive for greater efficiency, the must-have use of digital technology in retailing is having a big effect and opening up lots of opportunities for astute consulting firms. And to give you an idea of what drives those sectors to buy consulting and what they're buying, what the consulting management consultants do. Rather confusingly, we swapped the colours, I just realised, on these two slides. So now, the blue line represents each service line as a share of the total, and the red line represents the percentage change between 2011 and 2012. But you'll see that IT consulting, that is the consulting that goes around the business implications of new technology and the application of new technology to new ways of doing business, is just under a fifth of all consulting in the UK. Project management continues to be a very strong performer, and financial consulting, that's around business risks, financial modelling, risk and compliance, is 15%. So those are the big drivers of consulting spend for the UK marketplace. And it's interesting, I'll just make one final point about that graph, which is you see a big uplift in change management in 2012. And I think that would be about the fact that a lot of what consultants were doing in 2010 and 11 was really about driving down costs for clients. They were called in to say, look, we're in a crisis, we know that there's major problems, where can we cut our costs and make ourselves more efficient? And huge amounts of work were done around that. Now, increasingly, although it's from a relatively low base, people are moving to a slightly more positive agenda, which is, okay, we know we had to reduce costs, and we probably still have to reduce costs because there is still massive scope for reducing costs within the private sector as well as the public sector. But we now want to move to an agenda of implementing more positive change, and we need help in order to do that, to get ourselves ready for hopefully a more positive future. Many people today have mentioned the internationalisation of the industry, and that's been a big theme of UK firms as well. It's difficult to track it completely because, of course, many firms are just global. They are global operations, and they don't always report their numbers according to where the work has been done or where the work has been serviced from. But just anecdotally, we know that even quite small firms in the UK, where 3 or 4 years ago they might have been doing 10% of their work overseas, are now doing 40 or 50% of their work overseas. There's been that sort of drift. And why is that? They say it's because their clients ask them to do it, either because they're primarily because their existing clients want them to have a global service. And so they will often follow their clients around the world. But that tempts many of them into becoming more international just in their outlook. And they think of the marketplace not as a domestic marketplace anymore, but certainly as a European marketplace and as an international marketplace. So that's a very important theme. I've got a little graph here about where they think the work, where will you expect growth to come from in 2013? Well, of course, primarily they expect it to come from their own existing clients, but big expectations of growth even within the Eurozone, in the Middle East, Scandinavia, Africa, Australasia, all far and wide is where UK firms are looking to grow their businesses. Just quickly to run through perhaps some conclusions from that. I think the pace of change, even in a time of economic crisis and downturn, means that consultancies are adapting quickly and changing into getting into new areas. The whole explosion of digital technology is opening up huge opportunities. Many, and indeed cybersecurity, I think, is a big driver of business as well. It affects how firms relate to their customers, but it also affects how firms organise themselves. And on each of those fronts, they often need help. A lot of consulting firms in the UK are getting more and more interested in the modern customer, the modern consumer. How do you service the very demanding consumer of 2013, who now expects to have everything available at the click of a button when they want it, at the price they want it, because they can very easily compare prices online. All that sort of the impact of that just needs to be thought through by companies, because otherwise they're very vulnerable to competition and new competitors. And as we know, competitors can rise up very, very quickly these days. But consulting firms find it more and more difficult to manage their order book and their pipeline because there's greater uncertainty, and the horizons are shorter and shorter. There is at the same time consolidation in the UK. The onward march, or the return march of the big four accounting firms is very, very obvious from our data, and as well as the rise of some very small niche specialist smaller players who are doing very well, which creates great difficulties for people in the middle of that market and of that industry. And the final point I make is that I think the long-term impact of this period of economic difficulty for consulting will be that forever now clients are going to expect consultancies to be able to articulate and demonstrate the value which they deliver. No longer is it about, well, we'll look at that issue for you and make some recommendations. No longer is it about, we'll do that piece of work because you've asked us to do it. It's about having the conversation about the value that delivers for the client, and in quite specific terms, so that they can see the return on investment. And of course that opens up all sorts of interesting discussions about success fees, sharing risks, sharing rewards, different ways of doing business, joint activities, some of which was touched on this morning. So it's a fast-moving situation because of that. But I think that's if you like, a once and for all change in how consulting will be done in the UK, which will have very long-term and important implications.
Thank you very much, Alan. You know that we always look at you for a light, you know? In management consultant, we always look at UK as a leader we have to follow. Huh? No, it's true. I mean,